Hello, everyone. Good morning, and welcome back to the Pulse here with the PeakBot team. You are joined by Dillon and Ben, co-founders and co-hosts of this beautiful show. It is a Monday morning, another full week of trading ahead of us, and another full week of trading behind us, which is good. Last week was not as bad as weeks prior, at least for me, but we're excited to get into it here again today. We've got a action-packed agenda, a nice little surprise in the form of a guest, which we'll get into here in just a little bit. Of course, we'll be taking a look at our watch lists. We'll be discussing our automated strategies, some premium new automated strategies, and yeah, I mean, I don't need to spoil anything. I
That sounds
guess
great. I just want to mention, I'm also going to be talking about towards the end of the show, when assignments happen, what does that mean for the risk level in your accounts? I know last week, a lot of PeakBot traders got assigned. I know a lot of us were rolling from previous weeks, trying to roll for credits. And there were some deep in the money puts that were assigned. I fell victim to that as well. However, your risk profile doesn't change, and that's important to note. So we'll be talking about that in just a minute. But what do you say, Dillon? Should we hop in and get started with the watch list here?
let's do it. I guess just a quick, for anybody who's new to the show or not familiar, PeakBot is an automated trading platform built for the everyday retail trader. We make it easy, affordable, and transparent for the everyday person to put a stock trader in their pocket. We take well-known, time-tested option selling strategies and we automate them. We connect it directly to your broker, like our fantastic partners here at Tradier, as well as other brokers as well. And yeah, not a get-rich-quick thing. We're collecting premium. Our traders on average last year made about 32% annually. So I just wanted to throw that out there quickly. And yeah, Ben, let's get into it and let's open it up.
Cool. All right, so I'm going to pull up the watch list here. And for those of you that follow PeakBot's watch list really closely, this is going to be looking a little bit different to you. Maybe the data is organized a little differently. Maybe you're noticing the premiums a little different. And if you're noticing these things, that's because things are different. And I'm not on PeakBot's website. We zoom out here. I am on the Bull Trade Finder subdomain of PeakBot, a white labeled domain where we are now partnering with retail traders, expert retail traders, people that have been doing this for many, many years and have proven themselves to be profitable in the markets. So Dillon and I are both happy to announce, and let's get the heads up big here. I want to bring on Nick to the screen, Nick Giannotti. He's the CEO of Bull Trade Finder, one of our first partners to work with us on this subdomain white label arrangement here. We've been working with Nick for the past couple of weeks here, building out a customized strategy that he wanted to automate, and now his audience can automate. Nick, how you doing this morning?
I'm good. How are you guys?
Fantastic. Really, really excited to finally bring this to life. So Nick, I know a lot of the audience here is your audience, and I just wanted to make sure our audience knows who you are as well. Would you mind just giving a quick intro on yourself, how long you've been trading, what's your typical trading style, just so that way people get to know a little bit about you?
Yeah, perfect. So I've been trading just about going on 10 years now. I'm 26. I started trading just about my junior year in high school. From there, went from stocks, options, futures, basically anything in that boat. I've traded it. My main focus now is really focusing on options and futures, other than stocks long term, obviously. But options and futures, whether I'm trading actual one-sided options or I'm trading, two-sided options where I'm focusing on spreads or focusing on selling and collecting premium. That's where my main focus has been, I would say, over the last 3 to 4 years, and where I've started to really excel. So I would say that's about where I'm at right now. And it's just definitely made my trading a lot better, being able to collect premium and being able to find a strategy that truly worked for me.
Yeah, absolutely. And, you've built quite an impressive audience over the past, however many years you've been building your audience on X. And, you definitely have people coming to you that are new, that are learning how to trade. What's the, I'm kind of putting you on the spot here, but what's
Yeah.
like the number one thing you want new traders to look out for as it relates to them getting into options?
Okay. That's a really good question. I would say the biggest thing that I learned, especially from when I first started, the biggest thing was finding consistency in or the appropriate sizing, I would say.
Mhm.
And staying consistent with that sizing. If your account starts to build up, then obviously you could slowly approach to grow that sizing if you wish to, that is.
Yep.
Other than that, the biggest thing, especially with options, is going to be patience, but that's going to be with anything in trading. If you're not patient, if you're not waiting for the correct setup, if you're not waiting for that strategy and that plan to follow through, you're just going to bite the bullet on yourself. Everything is a mental thing in trading. You could have the best strategy out there, and there's millions and millions of strategies. It really all comes down to how you execute. So again, being patient, being consistent, having a plan, following that plan is going to be keys to making you successful. And I know that's something you probably hear every day, but as simple as it sounds, it's going to be the biggest factor
It's
in.
much easier said than
Yeah,
done too, right?
exactly. That's a
And
better way to put it.
it's that philosophy, Nick, that you just mentioned that I think bodes so well to automation, right?
Yeah.
Because with automations, you can stay consistent without even having to think about it. You won't, stray from the guidelines, and you'll be able to stick to the strategies. Which, that's why Dylan and I were so excited to partner with you, because that's the type of trading, that style that you exhibit. And so enough chit chat. I think that people are excited to see the platform, and then we can get into some promotions that we're running this week, so that you too can trade on this on Nick's automation platform. So let's pull back up the screen here, and so this is, of course, the watch list screen. Anybody that's been following PeakBot at all knows what our watch list kind of look like. The red here, of course, indicates upcoming earnings. So this will be constantly updated. This just reports companies that are reporting earnings within the next 7 trading days, give or take a day or so. So these are companies that at least Dylan and I like to avoid. There will be times where we're in a position and we are trading a company during earnings. Nick, real quick, what's your thoughts on trading companies that are going to report, especially selling spreads?
Yeah, it depends how you play it, but I would say 90% of the time I'm avoiding them. So anything in red, and I mean, we're going into earnings season now, so you're going to see a lot of it, but it's going to keep filtering itself out. Anything in red, I personally avoid.
Yep.
And
Yep.
really quick 2 cents on that. Look, those who we had Lex on the show a couple weeks ago or whenever that was, and one of his specialties is trading earnings. And if you know what you're doing and you have the time to do it, very different story. When you're selling options, the upside is very limited, right? When you're dealing with high volatility, your upside is limited to the premium you're collecting. Your downside is not nearly as defined, right? So the risk versus reward when trading through earnings reports while selling options, not financial advice, of course, but again, there's a reason we do this. Could pay off, but you're really rolling the dice. So yeah, as Nick mentioned, we've been in earnings season maybe a week or so here, and we got a couple more big ones to come. So
yeah, it'll be a choppy ride for the next couple of weeks. But like we mentioned, maybe find some companies that already reported. I'm looking at Wells Fargo here. They reported on July 12th. Could be, and they're towards the top of the watch list. Could be a good target for you. So this watch list will update during market hours every 5 minutes. So when the clock turns to 9:30 a.m. Eastern, bell rings, this watch list will start to update for the day. Now, as you are setting up your positions, and we'll get into that in just a minute, as you're setting up your positions, again, just remember, when you're setting these positions up, the data might change between when you set them up and when the trades actually get placed in your account, because trades are getting placed anywhere between like 12 and 1-ish, sometimes a little bit earlier, maybe towards 11. So Nick's strategy is different than PeakBot's strategies. Nick's strategy has more indicators built into it. It has more, I'll call it safety features, more features to take profit when profit's available if there's not more profit to be had. So we've been working with Nick over the past several weeks to develop this strategy, and we've been testing it. So it's definitely a step up from, any strategies that PeakBot's offering. So I'm really excited. I'm excited to use it myself. I'm going to use this show. Dillon, normally when you set up your portfolio, I'm going to set up my portfolio on Nick's platform, and I'm going to trade on Nick's platform this week. So a few things I just wanted to call out on the watch list. Of course, this looks like PeakBot's watch list, but if you're new, what we're showing here is we have the trend. So bullish, bearish. If the trend is bullish, the automation will be selling a put credit spread. If the trend is bearish, it'll be selling a call credit spread. EV, this is expected value. We did include a legend up top above the watch list, so that way you can understand what all of these lines mean. EV is basically saying, based on this trade setup, based on these deltas, which Nick's deltas are different than PeakBot's deltas, based on these deltas, based on the premium you're going to earn, based on the size of this spread, how much can you expect to make per, in the sense of how we're showing it on this expected value calculation, per share? So you multiply that by 100 because 100 shares per contract. How much money will you be making per share based on this exact trade setup? So we want to look for a positive EV. We don't want to get into a trade setup where we are going to put ourselves into a situation where we'd be earning negative, right? That's just a bad setup. So we like to look for positive EV as we keep going here. We've got probability of profit, the POP. What are the chances that the sold strike expires out of the money? And as option sellers, that's what we want. ROI. The ROI is just based on the amount of premium that we're going to be earning here. So estimated 216 on this top line here. And then what's our budget? What's our max loss? Also the size of the spread. So we divide that 216 into the by the 1300, and that's how we get to a 16% ROI. And then the buffer. How far away is the sold strike price from the current stock price?
That's a crazy high buffer.
It is, but I mean, we can see Carvana's reporting earnings this week. So I can only imagine what the expected move on Carvana is this week. I'm not touching that thing with a 10-foot pole.
Yeah, I miss that stock. I really miss that stock.
I miss Carvana as well, but this week's not the week to play it. So again, that's the watch list here, and you could sort it just like PeakBot's, sort it by probability of profit, expected value, ROI, however you want to sort it. We do default sorting it by expected value. But let's go over to the homepage here. And of course, we've just got some example trades here from my account from testing over the past couple of weeks. Again, this is just launched today. I think we should mention the coupon. So anybody that wants to try this, maybe let's get this on screen. You can go to btf.usepeakbot.com for this week and this week only. There will be a 50% off sale. Use code all caps BTF50 at checkout, and you'll get this strategy. And we'll get more into the strategy in a minute, but you'll get this strategy, this automation for 50% off. So again, this is Nick's strategy. What PeakBot has done is we've just automated it for him. We've put it into a system that we know works. We've been using this automated system for over 2 years now commercially at PeakBot. So it's, Dillon and I think we decided, hey, it's time to bring some people that actually know what they're doing. And I'm not just kidding. We kind of know what we're doing.
We're the tech right now. We're the tech in this partnership. We got an easy to use platform, and we wanted to partner with educators and traders who have a winning strategy, and we wanted to automate it. And that's what we've done here. And by the way, I don't think we've mentioned the name. You can see it on screen. Smart Spread. Love the name. Ben, let's talk through. Actually, let me ask Nick a quick question.
Yeah.
What you're seeing here is the light version. This is
Yeah,
He's a
put that on the
legend.
dark version.
Yeah, Ben, get out of the light mode, man. Okay, thank you.
man.
I hate light mode. I don't even know why we offer it.
That's for me, I like light mode.
Yeah. I knew me and Nick were like itching to get that on there. So let's talk through maybe some of what you're testing this week, and maybe Nick, what you might be testing in your account this week, and an approach. What do you guys think?
Yeah, that sounds good to me. So I'll just hop right into it. I've got Bank of America and Disney right now. Bank of America is currently in a bullish trend. Disney's in a bearish trend. So I'm looking for both directions to go here. And I'm going to be adding some more as we go through the watch list again. And maybe as the market opens, I might add a couple more. So Dillon, when we get to when you add your stocks, I'm going to be adding stocks as well.
Cool.
But the experience, again, very, very similar to PeakBot. And in fact, this looks like PeakBot, but it's not. It's an enhanced version. It is the Bull Trade Finder platform, better strategies. And to add a new stock, same process. And a big difference here is PeakBot will limit you on the amount of contracts you can sell per position. Now, with Bull Trade Finder, you're only limited on the total amount you can actually sell. And that's in total, right? So you can see here, the maximum amount of cash I can automate for this tier, the tier that I'm on right now, is 25,000. So I'm on tier 1. I already have $450 being automated. We can see that in my automated portfolio over here. Now I've got 24,550 left to play with. So this is a really awesome calculator you can use to figure out how much you have left. So let's say I wanted to trade Alcoa Corp. I don't, but I could just add that there, change the number of spreads. I can do 1, I can do 10, I can do 100, but I can't do 100 because that's too much budget. So let's just say I want to do 10, go ahead, click activate, agree. Here we go. And then just like you all are used to, that gets added to your automated portfolio. And then you are good to go. I'm going to remove that for now. And we are all set. So I'm going to be looking at the watch list, and maybe Nick, if you have any stocks in mind, let's talk about them right now. And then Dillon, maybe I'll kick to you. We could talk about it and start adding some tickers to either my portfolio or your portfolio.
Sure. Yeah, Nick, what have you been testing on? Of course, we're getting ready to officially launch this platform here. What's been working for you?
Yeah, I've done a couple of names. Let me just double check. But I know this week I'm looking to sell or spread up Run, Marvell, MRVL, and Upstart. Over the past couple of week or two, I've done a couple of names. I've definitely done Carvana. I've definitely done Roblox. And I've definitely done PLTR. So those are ones that I focused on a lot over the past 2 weeks. Obviously with earnings, I'm obviously switching off of Roblox and Carvana. PLTR doesn't have earnings until maybe another week, I believe it is. But other than that, Run, Marvell, MRVL, and Upstart is kind of what I'm looking at right now. And I'm going to dive in a little bit more, probably within the next hour, to check out some charts on my own and everything, and just see what else I could add to it.
So let's talk about that. Let's talk about that for a second, Nick. When you make these decisions, right? Ben and I on this live show, we go through kind of our process. Mine is maybe more simple than others. When you say, okay, let's just use Run as an example, since Ben got it highlighted. I have the chart pulled up here, or Upstart. When you go to make these trades, obviously, I'm sure you're utilizing the watch list as your primary tool to figure out what direction you want to go. Where do you go from there? Okay. What do you look at on the watch list to say, all right, I want to take a closer look at this? What are your steps to then add that stock to your automated portfolio?
So I'm looking at the EV. Like Ben said earlier, I'm looking for a positive EV. So anything preferably over 0. I would like a little bit higher, but I'm looking at that. Then I'm looking at the POP. So I'm really looking for anything over 75%. I think just about everything is maybe around there. So I look at the higher ones first. I'd say the 80s. Okay.
Yeah. Well, the beauty of this, Nick, sorry to cut you off, is this is your strategy. So you were able to make it so that way we're only trading those high probability of profits.
Correct. Yeah. And then I'm looking at the buffer and the ROI. I try to stay away from anything under 5%. That's just me personally. Like WFC right there and Chewy,
a little low.
I feel like, it's just not really worth it. I want to look for something a little meatier, at least, something with a little meat on its bones over 5%. And then I'm looking at the buffer, and then from the watch list, I have, let's say, 5 to 7 names that I like. I go look at the charts and just double check things myself. Simple 2-minute check, and then I start tagging them into the website.
When you're looking at charts, anything high level, we don't have to get, overly nerdy on it, but when you go and look at the charts, anything specifically you're looking for to confirm what you felt like you saw on the watch list?
Yeah. I'm just looking for trend. I'm looking for support. I'm looking for resistance. Bringing up run here. Okay. So run is obviously kind of near its highs. I would say it looks like we want to break out over that top there. But the downside to it. So let me see, where is it?
Yeah, and if you want to pull it up on your chart or whatever, no worries. Ben, I was looking at the technical analysis for run on Tradier right now. For the 1 week technical analysis, there's 13 buy signals, 8 neutral, and only 5 sell signals. Over the month, it gets a bit more neutral, but run has beaten me up in the past when we were trading on the wheel because I got assigned and I got hurt pretty bad on it. But for this strategy that you're trading here, which I don't think we've spoken about, it is a weekly credit spread, right? So primary entry is on Fridays, so 5 DTE. And the beautiful thing about Nick's strategy is it's got built-in take profits and built-in stop losses. That's a big separator from what we have, with our weekly credit spread strategy. So Nick and the team have been very strategic about setting those parameters. But yeah, Ben, you're looking at the potential strikes here.
Yeah, exactly.
That's what I was going to bring up.
Yep. So it looks like based on the strategy, we'd be selling the $16 strike. So if we go back to the chart, went too far.
Yeah, there's a lot of support around the 17 area. It seems like we're just trying to break out of this 18. And again, if it was to come down under that 17, which would take a lot of selling, there's also major support at that 16 sell level that we have. So I would believe that we're going to hold up through the week, find an area of support. Even if it came down to that 16, I just can't see it breaking through unless something drastic happens, that run is going out of business or something. I don't know. That's what I see technically. And that's why, me personally, I think this is just a good play for me to sell this week and take.
I'm with you, Nick. That $16 strike, that's run hasn't been trading at that level since 2 weeks ago. So when we're looking at this in the context of a 1 week span, it looks pretty solid to me. I'm actually going to be adding that to my automated portfolio on the BTF subdomain.
Yeah, I like this too. I think, what were the strikes, 17 and 16?
Selling the 16, I believe, buying the 14 or buying the 14.
Buying 1450.
Yeah, so there's definitely some breathing room there. It's not a huge spread, right? Which is nice. So it's not taking too much cash. You're not risking all that much, and it pays a pretty good premium. This has been a very popular stock over the last 2 years. Obviously, you can tell there's some volatility as we zoom out here, but stock's been relatively predictable. Knock on wood, not going to screw anybody there. But very cool. Okay. So what else, gentlemen? What else can we?
We did have a question come in, and the question is, do I need to create a whole new account, or is BTF just an upgrade? So I'm assuming that this is in the context of you already having a PeakBot account. BTF is a new account. It is an upgrade at the same time, all at the same time. So you have to go to btf.usepeakbot.com. Maybe let's get that on screen. And then, of course, we're running that promotion this week, 50% off for the first week that we're launching this here. You will have to have a different trading account. If you don't have a Tradier account, you can still integrate with Tradier. Of course, Tradier is PeakBot's preferred trading partner. Tradier Pro, $10, commission-free options trading. It's fantastic. I'm literally saving hundreds of dollars each week based on all the contracts that I'm selling. It's integrated with all the brokerages that PeakBot's integrated with. So very, very similar experience, better bots, and there will be more bots to come. So I think that getting started on Nick's subdomain here on Nick's platform is a good idea, especially as I don't want to give away too much, but this is only the first strategy. Nick's got an algo of his own that we're going to be putting onto the platform in a very short period of time. So that one will be fun when it comes out as well. So yeah, definitely worth creating a new account for, and yeah, give it a shot.
Excellent. So what I wanted to do, and thank you for the question in the chat there, I just wanted to take a second, Nick, to ask you a question about the built-in take profit and the stop loss, kind of where you have those set, your mindset that came into coding that into the logic. Tell them a little bit more about that.
Yeah. So when I started spreads, I would kind of let it go a little bit. If I had a loss, I would lose 400, 500%. And that's not what you're really looking for. Just because the upside is limited, the profitability of profit on spreads, depending on the strategy that you're using, is usually very high. Okay. So your chances of winning trades is very high. Again, depending on what strikes you're selling. Personally, again, I'm selling more conservative, safer strikes. So I'm looking for a level of profit. So in this case, I found out that the best suggestion is selling just around 70 to 80%, because then again, what is the point of holding for another, 20%? You're going to get another $10. And, that's something I'm willing to give away. As long as I locked in 100, if I'm missing out on 10, listen, it is what it is. I'm selling the position, I'm taking my money out and I'm good to go. And I'm ready for the next position. And I've had positions, and the reason why I did that, by the way, is I had positions that were 70, 80, even 90% profit to only watch them even, especially look at this market the past 2 weeks.
Yep.
Okay. Something like that is the most perfect example of missing out on 70, 80, or 90% profits, where in a second it could totally turn against you and I could be down 200% instead of taking 70 or 80% profit. Now, with the stop loss, again, let's use this week as a past example. If it's not going your way, at least you have a 225% stop loss. Now, let me get into that. So if your expected profit on the trade is $100, that means you are risking $225 instead. So, of course, if you were minus 500% in a position, you're already down $500. So the reason why I have the stop loss and what I've used over the past couple of years is this has helped me, one, save money, because you're always going to, well, let me put it in a better way. You got to preserve your capital in trading, because that is obviously, there's going to be losses in trading. Let me put it that way. And being able to preserve your capital is one of the, other than the mental part of trading, that is going to be the second key of staying alive in trading, growing from your trading, and being able to become a better trader. So preserving that capital with that minus 225% stop loss is key. And you're able to make that back. So what I found, just around that 200 to 225% loss, you're able to make that back within 2 trades, max 3 trades with profit. So that's why that number has, that's the number that I stick with. And again, I've done that for just about 3 to 4 years. I started with 300% and I slowly started to, drag it down until I found that 200 to 225% is the sweet spot. So that's the number that I kind of stood with.
Yeah. If you think about it, sorry, Dylan. If you think about it mathematically too, it makes a lot of sense. If let's just say take profits right at 75%, stop losses at 225. Well, 75 times 3 is 225. So that means that, at least on paper, now I know that the numbers are going to be slightly different, but that's essentially 3 wins for 1 loss in terms of the dollar amount there. But when you think about how many times the strategy is winning, and especially where you set your deltas, the strategy is set up to win 4 out of every 5 trades, just about. So, the win to loss size is 1 to 3, but the win to loss ratio is 4 to 1. So you're winning much more times than you're losing. So you're giving yourselves, it's actually really, I like it a lot. Mathematically, you're putting yourself in a really good position where you're cutting out those losses and taking enough profit. So that way, over time, law of large numbers here, right? You're going to achieve profitability based on that mathematical setup.
Yep. It's when you explain it and you talk through the numbers, and anybody watching, it's very easy to like try to complicate this. It's not complicated, right? That's the beauty of these strategies. It's all math based. It's all probability based. There's a reason why you set those profit targets and stop losses. I'm really excited for this strategy, Nick. You've done a great job, showing us this strategy and trading it manually. And, I think the sky is the limit when automating this strategy, especially with that watch list. And we're really pumped. I'm trading it. I've been testing it. I got a couple stocks on it this week, which maybe we'll take a closer look at. But what else to mention here, gentlemen, on this strategy?
Hey, you know what? We sorry, Nick, go ahead.
No, go.
I was going to say, we've got about a half hour to the bell. Nick, I think you could go ahead and get on out of here and get ready for your trading day. But yeah, if there's anything else that you want to say, and let's get that banner back on screen for 50% off at btf.usepeakbot.com. But yeah, Nick, it was great having you. Any last things that you want to mention?
And I would think I'm just going to take something from what Dylan literally just said. The sky is the limit. I would say the sky is the limit to PeakBot. And I'm not just saying that to say it, because truly being able to have an automated trading platform is big. I know over the past couple of years, I've had many people request that. And there's a lot of companies or people on the side trying to produce something like that is very shady and actually illegal the way they're trying to do it. These guys have definitely, and again, I'm not just saying this because I'm on here. These guys did it the right way. They got everything approved. They're all set. And I would say this is going to be a tool that definitely is going to revolutionize trading in the future. Seriously. So
thank you, Nick.
Definitely check them out. Definitely check out below if you guys are interested in mine. And if you guys have any questions, always ask.
Awesome. Yeah. Nick, really appreciate you, man. Again, Nick, CEO of Bull Trade Finder. You can find him on socials, on X at Bull Trade Finder. Him and his crew host live streams every single day on X. In fact, you're probably going that direction right as you log off.
Just started.
Thousands of viewers there every day. So they provide like a live trading room, a lot of trade ideas. Check them out. They're fantastic. We've jumped in there a number of times. So Nick, thank you so much for coming on the show. Big things to come. I'm sure we'll have you back on the show with an update as you've been live with our strategy or your strategy for a number of weeks or months here. So best of luck to you. Best of luck to everybody going to be jumping on the new smart spread strategy. And Nick, we'll see you soon, my friend.
Yes. Have a great day, guys.
All right. Take it easy.
So what a great guy. Great partner.
Yeah, awesome dude. I'll tell you what, I wish I was trading his strategy the past 2 weeks because my account is not good. Yeah, I've been getting beat up, but I've been getting beat up manually trading. My automated trades have been doing pretty good.
Yeah. So, look, we can't hold it against you too much because you're manually trading. And unless there's other reasons for it, you're manually trading mostly to be testing for our audience our partners' audience. But you also can't help yourself. I mean, you do love doing that.
I've made a decision over this past weekend that I'm going to mostly automated trade, and the amount that I was trading manually, I'm just going to shift that over, a lot of it over to, automated trading.
Yeah, like when you do your live trading with Thomas, instead of manually entering it, do all your research, do live trading, but set it up to be automated.
Yeah, I'll have to do that on Fridays. But it's a problem because, again, we built this company so that way we wouldn't be distracted by the screens. And every day while we're working, I find I've got a screen just for my charts. And I'm just like, that's not the point of what we're doing here.
It's not the point. It's not the
point.
And
so I want to personally get away from that. But I'm probably gonna load up on Nick's strategy. I love the additional parameters that have been added. It sounds similar to our trend spread, but it's not. There's a ton of spread strategies that are out there, and the parameters that he's using for take profit, stop loss, at least on paper, we've run through it 100 times at this point, just makes a lot of sense.
It really does. I want to talk through two of my trades that I'm entering on his strategy this week, and then I think we should talk about, Ben, before we wrap here, assignment on the trend spread strategy. So I'm going to pull up my screen really quick. Maybe we can get this on screen. So two stocks that I'm trading this week on the new smart spread strategy with BTF's Bull Trade Finders new strategy and platform. Carnival Corp, CCL. So stocks trading at 17.29. Again, that data will likely update. I'm not exactly sure what that's at pre-market, but we'll take a look. Bullish trend, expected value in positive, which is good. 77.2% POP, percentage of profitability. Now, and Ben, correct me if I'm wrong here. That is a direct correlation to the delta that's being sold. Estimated delta that's being sold, right?
Yep.
So we are looking at a 6.5% return on, I think that's ROI. And then I like the buffer here as well with about 5%. So there's a $2 spread earning $13 in premium. I like CCL. The other one I was taking a look at was Uber. Now that's on the bearish side. Again, I wanted to just kind of have one on each side of things. So 80%, just about percentage of profit, 10% ROI with about a 5% buffer. Again, another $2 spread, earning $21 in premium there. So if we just take a quick look at, if we take a quick look, not at us, but these charts here really quick. CCL, again, I'm looking to be bullish here. So I'll pull up the 1 month chart. As we can see, there's a pretty dramatic drop there a few days ago. Let's just look at the technical analysis. I'm liking this 13 buy signals, 9 neutral, 4 sell. I'm sold on that. And then for Uber, again, I'm bearish here, going to be entering a call credit spread on this strategy. Here's the 1 month chart. Looks like we got some room to grow. And for 1 week, we got 10 sell, 10 neutral, 6 buy. So it's a bit closer than really I'd like it to be, honestly, but I'm not going to get emotional about it. On paper, that meets what I'm looking for, and I'm going to rock with it. So those are two stocks that I'm trying out on the smart spread strategy this week. Again, try it out for yourselves. A premium strategy, more indicators built in, more logic around take profit and stop loss, as we've discussed on this show. So very excited for that. Ben, let's talk assignment. So on our trend spread strategy, okay, which is now available to everybody on the PeakBot platform. Technically, it's still in an open beta. We've crossed most of our T's, dotted most of our I's. The reason it's still technically in an open beta is because we're still making updates to it, which is something we're going to talk through right now. So the strategy on paper is built to avoid the assignment of shares. And that is true. It is built to avoid assignment. The reason why is because we're rolling contracts. We're closing them on the day of expiration around 12 noon Eastern and opening up new contracts for the following Friday. However, it is not impossible to get assigned shares. And in fact, more often, recently, it's been happening more often than expected, quite honestly, with these midweek trend reversals, some really deep in the money contracts. The options buyer, okay, we're the seller. The options buyer has the right to exercise their contract at any time. And when that happens, if they choose to exercise early, you're going to get your shares early. And so it kind of moves around that strategy. Now, Ben, what we'll be doing, and you can talk more about this, is what to do when assigned now versus the update we're going to be making in our strategy. So why don't you talk about that?
Yep. Thanks for that tee up there, Dillon. And I just want to reemphasize that. And we had Matt Cashman on here a couple of weeks ago talking about how assignments happen and who is selected. And it's a random process, right? There's no real rhyme or reason to who gets assigned shares. So don't think about it as, oh crap, I did something wrong. You likely didn't do anything. I mean, you definitely didn't do anything wrong. It's just a random process that goes by assigning shares to accounts. And like Dillon mentioned, it's been happening more recently. It happens more frequently when contracts are deep in the money, because for the options buyer, there's not much more upside for them to hold the contract versus hold the shares. When a contract is really deep in the money, the price correlation is so close to the actual stock price correlation that it actually makes more sense for them to exercise early, either sell their shares and then move on to the next position, or in the case where they're buying shares, where maybe they've got a call contract, get their shares and then do whatever they want with it from there, sell covered calls or just buy and hold. Deep in the money is where we see this happening a lot. And when a company's got an ex-dividend date, right? People want to get their shares so they collect that dividend. So they exercise the day before the X date. And then you could be on the other side of that. So as it relates to trading spreads and what happens, I'm going to pull up my screen here and I'm going to show what happened to myself on Dell. So Dell, for me, I had 5 spreads that I was trading last week, and it was on Thursday that I was assigned 500 shares. So I had a put credit spread open, 5 spreads. I was assigned on my sold strike. Now, it's important to realize here that although there's some shifting and now you've got shares and a contract, and it's not just 2 sides of a contract where you've got that spread formed, your risk profile is still the same, because even though you get assigned shares at a higher dollar stock price, you still own that put. So your risk profile is still the same, because you could sell those shares at whatever that put strike price is. So if you have, let's just say, for example, one spread at $1, your risk there is $100, right? So one contract, 100 shares, $1 times 100, your risk is 100. If the stock price falls $5, let's say you're assigned shares and it looks like you've got a huge loss on those shares, and it looked like that for myself on Dell, and actually put me into a margin call to where I had to sell those shares, and we'll get into that in just a second. But I just want to reemphasize, although it looks like there could be a big loss in your account, take a look at your bought contract, because there's going to be a lot of value on that bought contract now, and that value netted with the value of the shares, it's still going to get you to the same risk profile that you had with your spread. So that put is protecting you. Now, the only time you could get yourself into some trouble is if you either sell that bought put or you sell your shares and you don't sell the other one. So in the case where you want to get out of these positions manually, you could wait until expiration, and then those shares will just be sold at whatever your bought put strike price is. You'll realize your max loss and then move on to the next position. But if you want to get out right now, you would want to sell those 2 sides of the trade at the same time. That's the first side being your shares, and then the second being your bought contract. This could happen on the call side as well. But in this instance, it happened on the put side. So that's kind of what I did. I was a little mistimed. I was trying to figure out how to get more. I tried to get out of my margin call. I actually sold the shares first, as we can see here. Where is it? So I was assigned here.
Above it? Yeah.
Yep. Okay. And then here, I sold the shares. I took a loss here of a little bit like $10,000. But then on the bought put, I made about almost $8,000. So overall, a $2,000 loss, which was around what my max loss would have been anyway. But that loss could have been a little bit less. I think the max loss was really around 1,600, but I held on to the put contracts a little bit too long. And then I put myself in a little bit of a worse position. Again, I wasn't thinking entirely of, how do I minimize risk here? I was thinking more so, how do I get out of this margin call so that way I could get buying power to actually place trades? So that happened on a couple of positions, and it happens, right? Is that going to stop me from trading? No. Will I be a little bit more thoughtful about how I'm going about this? Yeah, definitely. And I even mentioned to Dillon, 10 minutes ago, I'm going to be doing more automated trades, just because I'm getting distracted, and as we're trying to run PeakBot here, it's not good for me to be distracted. So that's how you could, again, not financial advice, none of this is financial advice. That's how you could handle cases of assignment. And again, really important to remember, your risk profile remains the same, whether you have shares and a bought call or a bought put, or if you just have your spread intact still, same risk profile. So Dillon, do you have any questions on anything I just mentioned?
Well, no questions, but that example, like I got assigned Intel as well. So right now I have 100 shares of Intel. I have a market order. I put in a market order that's going to be sold here in 13 minutes. I'm going to take whatever my loss is. What, Ben?
Are you going to get out of your contract at the same time?
Well, I think the contract already expired. I mean, it expired on Friday, right? So I don't have. Gotcha. I don't have any, and is that a scenario that maybe you didn't talk through? Because like if we look at here, I'll just quite literally pull up my account.
Yeah, so that's just like a normal assignment. That's not early exercise assignment. Okay. So in that case, Dillon, yeah, then you are exposed because you don't have another contract hedging movements in either direction.
Yeah. So and explain how that would happen with our trend spread strategy. Right. So how was if that wasn't due to early exercise, right? So how would somebody get assigned on Intel here, like myself? Right.
Yeah. So I mean, was this on the wheel or on trend spread?
This was on trend spread.
Okay. Then that probably should not have happened because the contracts should have rolled for you. Maybe there was no volume on Friday. And you weren't able to roll your position.
You know what I think it might have been, Ben? I think I may have had smart exit on Intel.
Okay.
That could have done it, right?
Yeah, that would have done it.
It wouldn't have opened
it wouldn't
up
have rolled for you.
Okay, I'm glad we did this. That's another scenario here then, right? I had smart exit set in my account on Intel, meaning I wanted it to get out of my current contract, close it as it would, and not open a new one. However, I ended up getting assigned. So now I have my 100 shares of Intel. I have my market order set to fill here when the market opens, and I'll take my loss, whatever that might be. But okay, so that's another scenario. If you have smart exit set to your trend spread strategy, and you get assigned, then yeah, you're going to end up with the shares without your contract still there.
Now we are building into the bot. Dillon mentioned we're in open beta. We are building into the bot the feature where if this does happen, the bot will place orders to close both your shares and the bought contract for you. So you don't have to think about it. At that point, you've already realized your max loss. So might as well cut the cord and then use the capital to make other trades.
Yep. So it'll perform. Our bot is going to perform a check with your broker. If you now have the shares, it'll get ready to start selling that for you. At the next market open. So with a market order, right?
Yeah.
Okay. So that's being built in. A couple other things are being built into our trend spread bot. Some other take profits different than what we discussed with Nick and his smart spread strategy. We still really love his approach there. We're doing things just a little bit differently on ours, but Ben, I think that's it. My account had some nice recovery this past week. My account balance right now is at 17.9. That was as low as 17.5. So I made about $400 last week. Happy with that.
Awesome.
On the way back to, that I think I was as high as 19.5 in this account. So we're crawling back here. I think that's it, Ben. You got anything else?
No. Well, I say no, and then I'm going to say something else. But
Go ahead.
so yes, as you're mentioning, crawling back here, PeakBot's strategies, right? We estimate it takes about 7 to 8 weeks to crawl back to where you were after a big loss, right? And we had some big losses over the past 2 weeks here, and Nick's strategy on BTF is designed so that way the crawl back is actually half the time of PeakBot's. The crawl back is only about 3 weeks.
So it's more than it's less of a crawl and more of a jog.
Maybe a walk.
Okay, well, it's a walk. We're walking back. So yeah, look, we're pumped about Nick and that strategy. We have more coming. We have more partners that we're working with, where we're providing the simple automated trading platform where they're plugging in their automated strategy. We got a lot of exciting stuff to come. We'll likely be bringing on those partners as guests here on our show and the Tradier Hub as well over the coming weeks, maybe months. So keep an eye out for that. Again, their strategies are available on all the brokerages in which we are integrated with. It is a separate account. They will have that subdomain. So rather than just use peakbot.com, for Nick, it is BTF, which is short for Bull Trade Finder, btf.usepeakbot.com. And for the last time, use code all caps BTF50 for 50% off your smart spread strategy. You could sign up using that code this week and this week only. So check it out, get in, get on board, and wishing you the best of luck with your trading. So Ben, I'm not even going to ask if you have anything else. I'm going to get us signed off here. We only got less than 8 minutes till the market opens. Appreciate everybody tuning in. Ben and Thomas will be live trading later today.
Yeah, we will.
And Ben's going to be automating it rather than doing it manually, hopefully. And
some manual.
Okay, well, he can't help himself. Thank you, everyone. Appreciate you. We'll see you soon, and we'll see you at the peak. Take care.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.